Hi, welcome to this video. So in this video we are going to see the top 3 mutual funds for systematic investment process, that is SIP, for the year 2022. So before getting into the video, I just wanted to say two things. One, I have personally invested in these mutual funds and I'm doing an SIP. They are giving excellent returns. And second thing is disclaimer: this is not an investment advice. This is just for your educational purpose. Any profit or loss that you incur by investing in these mutual funds, I am not responsible for that. So let's get started. Usually I would like to diversify my portfolio because there will be some time where large cap stocks will be in a consolidation, whereas mid cap and small cap will be doing much better, and you will be getting returns in those mid cap and small cap fund, but you won't get that much return in large cap fund, and vice versa. There will be some time where large cap will be large cap and small cap or something will be doing better, and the other mutual fund will be in a consolidation or will not be doing that much great. So in that time you will get a return in one or two mutual fund and you won't get any return in the other one. So it is always better to diversify your portfolio, so in every condition you will get some returns in any one of the mutual fund. Okay, so in this video we are going to see three different mutual funds. One is small cap one, other one is mid cap one, and third one is large cap one. So it is very good to diversify your portfolio. The first mutual fund is Kotak small cap fund. So this is related to a small cap fund. Let's see how many persons preferring SIP investment. So here you can see almost 75% of the people are preferring SIP over lump sum or one-time order. So that's a great one. And let's see the returns. So here you can see the returns given by this fund. 1 year return of 72%. So don't expect this much return in the upcoming years. Maybe you can get, but I'm not sure whether you will get 72% or not, because this is due to the COVID fall and the bull run that has happened recently. And the 3 year return of 35% and 5 year return of 25% and all-time return of 22%. So from this it is evident that on an average you will get a return of about 20%. So 20% and above return is a very great return, because when we compare this return to fixed deposit, then this will be your 3.5 year return in fixed deposit rate. There you will get 6 to 6.5% return. In order to get 20-25%, you have to wait for 3 to 4 years, right? So that's a great one that you are getting that return in just 1 year. Also you can go with Access small cap fund. Also both funds are similar and they will give the similar returns also. That's your choice, you can go with either of the one, both will be same. And here you can see the stocks that this mutual fund has invested. All these are familiar names like Century Plyboard, Persistent Systems, Supreme Industries, Blue Star, LST Surfactants. All these are very good stocks, and their portfolio is also very well diversified. They have invest in 9 different sectors. You can see their contribution here in the pie chart. Even the top 5 stocks that they have invested contributes just to 20%. This percentage indicates how much the portfolio is diversified. If the percentage is less, their portfolio is very well diversified. 20% is a very well diversified one, and beta is also 0.9. That's a great one. It's a low volatile mutual fund. Let's see the pros and cons. The pros is 3 year and 5 return is higher than the category average. That's a great one, and this has outperformed the small cap index. Like the small cap index has given a return of 250 to 270% return in the 1 to 1.5 years, but this mutual fund has generated more returns. Like it has generated around 300% return over the 1.5 years. They have outperformed the index, so that's a great one. And the expense ratio is also 0.48, which is very less. The expense ratio is nothing but the amount that you pay to this mutual fund, because you are giving your money and this mutual fund is utilizing their energy, their time, and they are investing in their in the stocks they analyze and giving you the returns, right? So you have to pay some amount to them. This is the amount that you pay them, and 0.48 is a very less one. This is a average charge all mutual funds charge. So this is also a pro. And cons: AUM is 6,500 higher. I don't think this is a higher one. This is a medium one, so there is no issues. And the 1 year return is lower than the category average. I don't go with this one because due to this bull run, even the stocks that are not worth have rallied like anything. So we have to consider the long-term run. You can see the 3 year and 5 year return. You can see that has given a great return. Category average is 18% for 3 year return, but this mutual fund has generated 36%. That is twice the return, right? You have to always go with the longer term return. So everything is looking positive in this mutual fund, if you're going with SIP, then you have to pay a minimum of 1000 rupees per month. If you're going with a one-time investment or lump sum, you have to pay a minimum of 5000 during your first installment, and after that you can go with 1000 rupees or more. So this is a great one. So also you can go with Access Small Cap mutual fund. Both are similar mutual funds. The second one is Access Midcap one. So this is a midcap mutual fund. They invest in midcap stocks. Over 83% go with SIP orders. So that's a great one. You can see the returns, all-time return of 21%, 5-year return of 25%, 3-year return 26%, 1-year return 40%. On an average, you're getting a return of about 20%. That's a very good return. You can see the stocks that they have invested in: Cholamandalam Finance, Coforge, ICICI Bank, DMart, and Bajaj Finance, Apollo Hospital, HDFC Bank. All these are excellent mid-cap stocks, and the portfolio is also very well diversified. They have invested in 8 different sectors. You can see the diversification in the pie chart here, and the top 5 stocks that they have invested contributes just to 18%. So that is very well diversified, and beta is just 0.7. That's a very low beta. That's a very positive one. And pros is like 3 and 5 return is higher, and alpha is higher. Expense ratio is just 0.46. That's a great one. And higher AUM 16,000 crores. So many people are investing in this mutual fund, so they are getting a higher amount. So they want to diversify the portfolio. In that case, they will generate lower returns when compared to other mutual funds, but at the same time you will get the risk is also limited, right? When they are investing in many stocks, when they are diversifying the portfolio, your risk is also diversified, but the return is also great, right? You are getting around 20% and above. That's a great return. I don't think that as a negative one. And 1-year return also less than category average of 30%. As already said, we have to always go with a 3-year and 5-year return. So in that case, it is generating more returns when compared to category average. Okay. The next and the final one is Canara Robeco Blue Chip Fund. So this is a large cap fund, and this is an excellent fund. Okay, it is having an SIP orders of over 80%. So let's see the fund returns. So 5-year return of 20% and above, 3-year return of 22%, 1-year return of 26%, and all-time return of 15%. So here also you're getting an average return of 20% and above. So that's a great one. Infosys, ICICI, HDFC, Reliance, all these are familiar one days. Yes, no issues with that. And the portfolio is also diversified into all the sectors. So you can see the diversification, and top 5 contributes to 35%, and beta is 0.86. so all these numbers are also good. And the pros is like 3 and 5 return greater, expense ratio is just 3.6, and cons is like 1-year return is less than the one category average, because during the last year in large cap IT stocks rallied like anything, so that mutual funds might have given great return, but over a period of longer run, this mutual fund has given return of 20% and above. Also you can go with other mutual funds like Mirai Asset, large cap fund, or Access Blue Chip Fund. So this one, Mirai Asset and Blue Chip, Access Blue Chip, this is also a very good one. That's your choice. You can analyze further and you can check which one to invest. Okay, let's see the SIP criteria. That I think you have to invest minimum of 1000 rupees every month if you're going with the systematic investment, and if you're going with lump sum investment, then in the first time you have to go with 5000 rupees as an initial one, and after that you can go with 1000 rupees. The best thing with SIP is whenever there is a crash, you can buy additional quantities. So this is the COVID fault, right? After this, the stocks has rallied like anything. This is a bull market, right? After this crash, this is a almost 40% crash. After that, here is a small one, here is a small one, here is a small one, and this is the current correction. So these corrections are very less, like 3%, 4%, 5% correction, but this one is a 10% correction. 10% correction in index level is a very great opportunity for the investment. So if you are going with systematic investment, then you have already bought one quantity here, but it is also great to buy more here, because 10% correction in index, you won't get that opportunity again. Even after you are buying, if the stock market crashes again, you should buy again here. So again, let's say if the stock falls 10%, then there is a correction of 20%. 20% is a bear market. After that, that's a great opportunity to invest. So whenever there is a correction of 10% on 10% above, you should be able to buy more at the dip, because this is when you will get higher profit. For example, if you have this is a dip, right? If you have invested here, then you have get a you would have got a more returns, right? If you have invested here, you would have got a great return. If you have invested in this dip, you have got a higher return. So the same way, this is a dip. So whenever there is a dip, you should be able to buy here. Even let's take the post history. Here there's a small dip, here there's a small dip, and this is a bear market dip. So in every dip you have to buy. We may not be able to spot the exact dip, but we should be at least able to average the, right? We may not be able to find this dip, but at least we should buy it here, right? That's the thing that I wanted to say. Thanks for watching.